Disclaimer: nothing in this video is financial advice. I'm not a financial advisor. Bitcoin is extremely risky and volatile. You could lose money. Always do your own research and only invest what you can afford to lose. Now, let's talk about what BlackRock is really doing. BlackRock just filed documents with the SEC that reveal something absolutely massive about their Bitcoin strategy. And when I say massive, I mean this could be the catalyst that pushes Bitcoin to $500,000 or even higher by the end of 2026. Now, I know what you're thinking. $500,000. That's insane. Bitcoin is only at its current price right now. But here's the thing. BlackRock doesn't make small moves. They manage over $10 trillion. That's trillion with a T, and when they go Elon on something, markets move. In this video, I'm going to show you exactly what BlackRock's new filings reveal, why major institutions are quietly accumulating Bitcoin right now, the mathematical path to $500,000 per Bitcoin, and what this means for your portfolio. And stick around to the end, because I'll tell you whether now is the right time to buy Bitcoin or if you should wait. Let's dive in. Alright, let's talk about what BlackRock is actually doing. In recent SEC filings, BlackRock's Bitcoin ETF ticker symbol EBITDA's been accumulating Bitcoin at a rate that's honestly shocking. Here are the numbers. BlackRock's Bitcoin ETF now holds over 250,000 Bitcoin that's worth approximately $17 billion at current prices. They've been buying an average of thousands of Bitcoin per day for the last several months. At this rate, BlackRock alone could own a significant percentage of Bitcoin's total supply by 2026. Now, why does this matter? When retail investors, regular people like you and me buy Bitcoin, we might buy $100, $1,000, maybe $10,000 worth. But when BlackRock buys Bitcoin, they're buying hundreds of millions of dollars worth. And they're not buying to sell next week. They're buying to hold for years. Bitcoin has a fixed supply. Only 21 million will ever exist. About 19.6 million have already been mined, and millions are lost forever in forgotten wallets. So, when institutions start hoarding Bitcoin at this scale, supply gets tighter. And when supply gets tight, while demand increases, prices explode. But here's what most people are missing about BlackRock's strategy. BlackRock isn't just buying Bitcoin for themselves. They're building infrastructure for the entire traditional finance world to get exposure to Bitcoin. Think about it. Pension funds can't just go to Coinbase and buy Bitcoin. They have regulatory restrictions, fiduciary duties, and compliance requirements. But they can buy a BlackRock ETF. It's a regulated, approved financial product that gives them Bitcoin exposure without the custody headaches. So what BlackRock is really doing is opening the floodgates for trillions of dollars of institutional capital to flow into Bitcoin. Here's how this plays out. First, BlackRock launches its Bitcoin ETF, and it's a massive success. Then, other institutions see this and feel the FOMO, so they launch competing products. Next, pension funds, endowments, and sovereign wealth funds start allocating 1 to 5% of their portfolios to Bitcoin. Finally, a supply shock hits, and the price goes parabolic. We've seen this movie before. When gold ETFs launched in the early 2000s, gold went from $300 to $1,900. That's a 6x move. Bitcoin is more scarce than gold. It's more portable, it's more divisible, and it's just getting started with institutional adoption. If Bitcoin follows even a fraction of gold's path after the ETF approval, $500,000 isn't just possible, it might be conservative. Okay, let's get into the actual numbers. How does Bitcoin realistically get to $500,000 by 2026? I'm going to give you 3 scenarios: conservative, base case, and bull case. The conservative target is $150,000 by the end of 2026. This assumes moderate institutional buying continues. There are no major regulatory setbacks. Bitcoin maintains its current market dominance, and general crypto market sentiment remains positive. Even this conservative case is a significant gain from current levels. The base case target is $300,000 by the end of 2026. This is my primary expectation. Here's why. BlackRock and other institutions continue their aggressive accumulation. 2 or 3 nation-states announce they're holding Bitcoin in their reserves. More Fortune 500 companies add Bitcoin to their balance sheets, following MicroStrategy's lead. The Bitcoin halving supply shock from April 2024 really kicks in, and global liquidity increases as central banks pivot their policies. At $300,000, Bitcoin's market cap would be about $6 trillion. For context, gold's market cap is around $13 trillion. Bitcoin capturing just 5 or 6% of gold's market cap. Totally reasonable. And now, the bull case. $500,000 or more by the end of 2026. This is the scenario where everything goes right. The US establishes a strategic Bitcoin reserve. Multiple countries adopt Bitcoin as legal tender. Major central banks begin holding Bitcoin. Inflation fears drive a massive flight of capital to Bitcoin. Retail FOMO returns at unprecedented levels, and the supply shock becomes extreme. At $500,000, we're talking about a $10 trillion market cap. That would make Bitcoin roughly equal to gold in total value. Given Bitcoin's superior properties as a store of value in the digital age, it's not impossible. Now, is $500,000 guaranteed? Absolutely not. Nothing in investing is guaranteed, especially in crypto. But is it possible based on institutional adoption, supply dynamics, and historical patterns? Yes, it's absolutely within the realm of possibility. So what does all this BlackRock institutional activity mean for regular investors like us? The good news is that Bitcoin is being legitimized by the world's most powerful financial institutions. The long-term price trajectory looks extremely bullish. The infrastructure is improving, making it easier to buy, custody, and use Bitcoin. Regulatory clarity is improving in most jurisdictions, and you're still early compared to most institutions. Think about it. If BlackRock is just now building their Bitcoin positions, and most pension funds haven't even started, you're ahead of trillions of dollars of institutional money. The challenges are that volatility will remain extreme. 50% drawdowns are normal. Regulatory uncertainty still exists in many countries. Institutional dominance could reduce Bitcoin's decentralization. Short-term price action is unpredictable, and competing technologies could emerge. Here's my honest take on what retail investors should consider. First, your time horizon matters. If you need this money in the next 6 to 12 months, Bitcoin is probably too volatile. But if you can hold for 3 to 5 years or more, the risk-reward looks compelling. Second, position sizing. Never put more than you can afford to lose into Bitcoin. A common approach is 1 to 10% of your investment portfolio, depending on your risk tolerance. Third, dollar cost average. Instead of trying to time the bottom, consider spreading your purchases over 3 to 6 months to reduce timing risk. And finally, custody matters. If you're buying significant amounts, learn about self-custody, not your keys, not your Bitcoin. The question everyone wants answered: should you buy Bitcoin right now at its current price? Here's how I'm thinking about it. Looking at the current price action, Bitcoin is trading around key technical levels, and momentum indicators are showing some mixed signals. My perspective: if you believe the institutional adoption thesis and BlackRock's moves suggest it's real, then Bitcoin at its current price could look like an absolute bargain when it's at $300,000 or $500,000. Think about it this way. If Bitcoin goes to $300,000, buying at the current price gives you a massive return. If it goes to $500,000, the return is even more astronomical. Could it drop 30 or 40% before going up? Absolutely. Bitcoin is volatile. That's the game. But if you're thinking long-term, and you believe institutions will continue accumulating, current prices may be your last chance to buy Bitcoin at these levels. That said, and I cannot stress this enough, only invest what you can afford to lose. This is not financial advice. I'm sharing my analysis, but you need to make your own informed decisions based on your financial situation. Alright, let me give you my final verdict and a potential timeline for Bitcoin reaching $500,000. Through the rest of this year and into early next year, we could see continued institutional accumulation and price consolidation, building a foundation for the next leg up. Then, into mid-2025, the halving supply shock begins showing its effects. Institutional FOMO intensifies, and Bitcoin could break key resistance levels, targeting $100,000 to $150,000. From late 2025 into mid-2026, mainstream media coverage could intensify. Retail FOMO returns, and we might see nation-states announcing Bitcoin reserves, pushing the price toward $200,000 to $350,000. And finally, in late 2026, we could hit a peak euphoria phase with maximum institutional and retail participation, targeting $300,000 to $500,000 or even more. Will it play out exactly like this? Probably not. Markets never move in straight lines. But based on BlackRock's aggressive positioning, historical halving cycles, institutional adoption, and supply and demand, the path to $500,000 Bitcoin by late 2026 is becoming increasingly probable. Just remember, this is a high-risk, high-reward investment. Bitcoin could also face regulatory crackdowns or market crashes that delay or prevent these targets. Always do your own research. Alright, now I want to hear from you. Do you think Bitcoin can reach $500,000 by 2026? Drop your prediction in the comments right now. I read every single one, and I want to know what you think. If you found this analysis valuable, hit that like button. It helps the algorithm show this video to more people who need to see it. And if you want daily Bitcoin and crypto analysis, subscribe and turn on notifications. I've also got videos on the top altcoins for 2025 and how to build a crypto portfolio. Check those out if you want to diversify beyond just Bitcoin. One last time, this is not financial advice. Bitcoin is extremely risky. Always do your own research, consult with financial professionals, and never invest more than you can afford to lose completely. Thanks for watching. Let's see if BlackRock's strategy plays out the way we think it will. I'll see you in the next video.